Hey guys, this is Coach Cindy here. Welcome back to the trade recap. I'm going to be going through some of what happened this past week. Today, we're diving into the NASDAQ futures market. I'm going to be breaking down some key movements from the past week. So, whether you have been trading this or not, you're trying to stay informed. Yeah, let's get right into it. So this past week has been quite the roller coaster for the NAS. We kicked off the week with a strong bullish sentiment driven by positive earnings reports from tech giants. This pushed the futures to test new highs earlier in the week. So I'm going to go to the day chart. Let me get all this stuff off for you guys. Okay, awesome. And so as you can see, the start of the week, which was Monday, August 19th, bit of a roller coaster. Sorry, guys, let me just take off these alerts. And I'm going to explain why I have these alerts as well. Let me just remove this over here. Otherwise, it's going to go on and on and on and on. Okay, so this past week has been quite the roller coaster. We kicked off the week with a strong bullish sentiment. As you can see over here, price went from 527 all the way up to 866, so 300 plus move just on Monday. And this was driven by earnings reports coming from tech giants, so it's kind of pushed the futures into a new kind of tested new highs. As you can see, it tested new highs for this week, earlier the week. So companies like Nvidia, Microsoft exceeded expectation, which I think fueled optimism amongst investors. So as a result of this, the Nasdaq climbed approximately 2.5% by midweek. But as we all know, the market is never one-dimensional. By Thursday, we started seeing a shift. Concerns over inflation, rising bond yields kind of began to weigh heavily on the tech sector. Wow. Hold on. Okay, this market is talking. But let me go on. Let me just remove this. Let me go on with my talk. All right. As you can see, we're seeing this in real time. All right. Where was I? Concerns led to a sharp sell-off. NAS dropping by 3% by the end of Thursday's session. As you can see, it was a sharp fall for the NAS, which evidently traders were grappling with mixed signals from economic data. And so a lot of things to talk about, a lot of things to kind of go over when you're trading. Please keep in mind when there are updates in policy, economic data, you want to make sure that you are either out of the market, you've taken your profits, or trading maybe before that. You do not want to get caught up in that hurricane, especially with things progressing. It's a new quarter coming up, and so we want to make sure that we are good. Adding to the uncertainty, the latest job report was released on Friday. While the job market shows signs of resilience, wage growth continues to be a concern, feeding into the inflation narrative. This led to some recovery in the futures. Okay, and so as you can see here, we had a sharp fall on yesterday and kind of recovered almost all of its gains from the previous session. Okay, and so Nasdaq started strong, but significant headwinds, as you can see, as the week progressed. Despite the volatility, the market still managed to hold in some gains. So we will see about that. Next week we have. Let me see what's happening next week. We want to make sure that we're always staying up to date with what's going on. So next week we have next week Tuesday we have CV consumer confidence, unemployment claims, CPI as well. Tomorrow you have the GDP as well. All right. Okay, so guys, again, lots of economic data, lots of manipulation in the market, but let's just go back to the basics. Okay, now what is happening is we have to go back as retail traders. We don't know when the institutions are gonna have manipulation. We don't know if it's gonna go up. We don't know if it's gonna go down. Oh my goodness, this is really. Oh, if you went in for a buy, it is literally coming back to this area of imbalance right here. Okay, guys. So, okay, let's start with this. Let's go back to the day. So this is what I want to do. I want to take it back to the basics, okay? And that is finding areas of imbalance. Why is this important? Because areas of imbalance represents where institutions are making their move. It represents where institutions are kind of leaving behind a footprint of unfilled orders. Okay, so I'm going to take it back all the way down here. We have a drop base rally. As you can see, there's an area of imbalance. Okay, we have an area of imbalance over here. Guys, going back to your basics never will never let you down. Okay, area of imbalance. We have a rally base rally over here. We have a rally base area. So all these areas of imbalance are indicating where price is likely to move again in the future. And I just want to show you guys something. Here we had a rally base rally. Here an area of imbalance. Price is just merely doing what it's supposed to do, which is coming back to that area of imbalance over here. So let me just draw this out here, this rectangle. Area of imbalance for this week. We had a rally, base rally. As you can see, Monday was an area of imbalance. It took a couple of days to come back into that area of imbalance. Now, as you can see, we have another area of imbalance on the supply side, which is over here. Area of imbalance. Yesterday, price literally came back to fill some orders and it's falling back down to this area over here. Now, okay, yeah. Area of imbalance, area of imbalance, area of imbalance. Price shut down, came back into that supply zone, and now it's coming back into this demand zone right here. So the question that you have to ask yourself, well, where is price likely to go? As you can see, it made a couple of highs during this week over here. If I just go back to the day, I just want to have an overview. We have a couple of imbalances. Again, this is how I trade. I'm looking for areas of imbalance and where I can kind of execute my trading. So price is looking to come back into these fresh zones over here. Okay, so it came into this demand zone, kind of had a continuation swing all up until Monday, and then it started retracing back again. Now, could it come back to these zones below? Absolutely. This is what we got to look out for. Okay, so this is what I'm seeing. I'm seeing if there's a breakout above this line, which is above this area of supply over here, it's going to shoot up to this next fresh zone over here. This zone has never been tested yet. Market went as high as almost 21,000 and came back into the zone over here. So we had a supply zone over here. We have a supply zone over here. So price is just merely looking to fill these orders. Now, if you notice, we have two major reports coming up. Well, three actually coming next week. What do you think the institutions are trying to push? Where do you think the institutions are trying to push price? Okay, so news and economic data is used to manipulate price to get them to go in a certain direction. Okay, so it can either push them up to this direction where there's fresh highs over here. Price has never been here before. Well, it has been here, but it didn't come back to fill in orders. Price didn't come back to fill these orders. And so as you can see, price is looking to either go down and fill these orders over here or to go up to the side, depending on the economic data next week. So my advice would be, or just a suggestion would be, to make sure you are identifying areas of imbalance. Okay, the area of imbalance shows you the beginning of the footprint of the manipulation of the market. Okay, now is it going to take time to do an entry? Absolutely. Can you place entries in between? Absolutely. Okay, absolutely you can. So as you can see, for this week alone, I'm going to take all these drawings off. For this week alone, your price was ranging over here. This Monday. Okay, Sunday. So you just close this off. This is the week's price range. Okay, this past week's price range. It was literally going in from 2028 to about over here. Okay, so because of the economic data coming out next week, price institutions are obviously looking to break price out. Now the question is obviously where are they gonna let price break out? So they are looking for pending orders. Okay, where are those pending orders? How many orders are sitting above here? how many orders are sitting above here, and that's what we got to look at. How many orders are sitting here, how many orders are sitting around here. Okay, so institutions are likely to push price in a certain direction to collect. Okay, they are very, very careful as to not make any sudden moves without any economic data. Okay, and so I believe that next week, or maybe starting Monday, it's going to be areas of accumulation. Okay, so you're going to probably see a lot of um, consolidation. That's what I feel. They're going to accumulate as much orders as they can, and then once the economic data comes out, they're going to push it in a certain direction. It can either go to the upside, which it is in an uptrend. Okay, so we had a rally-based rally, a base rally. It kind of broke this previous swing high over here, swing low. All right, so we had a swing high, this previous downward swing low. Okay, it broke that structure has been broken. Okay, so as you can see, it's hovering over here. So I think it's going to be making accumulating. Okay, and then it's either going to push to the upside to fill these fresh highs, right? Or it's going to come down over here. That we need to keep an eye on, and that's going to be happening probably next week, Tuesday, Thursday, and Friday. Okay, and so just be on the lookout for that. If you are a scalper, you want to make sure that you have your area of price range. Okay, look for your area of price range, which is over here. Go to a lower time frame, which is the 1 hour, and you can kind of gauge where to trade from. I'm going to be trading from this amount, and so you previously saw all my alerts. That is what my alerts was for. My I normally put on alerts on TradingView to gauge where price is, because I don't want to be looking at the chart the whole day for 24 hours, right? So I put on areas of alerts on certain areas where I think it's good entry. Okay, so if I'm on the 1 hour, I can clearly see that this was an area of imbalance right here. Price moved downward and then came back to fill that order. Okay, again, here imbalance started right here on the Monday, and then it came back and filled it on Thursday. Okay, so it might take some time, especially if you're a long term trader, for your areas to be filled. Am I telling you to wait that long? No, you don't have to, but just kind of see where price is ranging. Give it some time to kind of formulate a structure for you so that you can make the best decision possible. Okay, so for next week, so what does this mean for the coming next week? You should definitely keep your eye on any updates from the Fed, as well as any key economic indicators like the upcoming CPI report, the GDP report, and I think what was the other one? The consumer confidence report. Okay, the sector will likely remain in the spotlight, obviously, and volatility continue to be dominant here. But what I am saying, whether you're trading euro, whether you're trading CAD, the number one is to look for those areas of imbalance. Okay, here's an area of imbalance. Price can likely come back here for orders and keep going up. Okay, so as you can see here, again, area of imbalance. Price came back and it started to fall some orders. All right, and so will this happen all the time? Not 100%, but as you can see, when there's an area of imbalance, price comes back to fill it up. Okay, now again, you can use the foundations of day trading and apply it to any market. Okay, so I want you to keep that in mind when you are trading, to keep in mind that institutions are manipulating price to get into a certain area of liquidity. Okay, and so they use the economic data to manipulate and to make these large moves, so that we don't blame them for manipulation and we just, say it was an economic data report that came out. All right. So again, guys, always search for those areas of imbalance so that you can at least know where price might go. As you can see, area of imbalance, price came back down to fill it up. Here was an area of imbalance yesterday, and price filled it today. So the question for next week, depending on the economic reports, is the institutions going to be going over here to fill these new fresh highs, or are they going to bring it back down over here tomorrow? That will all depend, okay, on where there is the most liquidity available And what I mean by liquidity is these are people's orders, their pending orders, sell limits, buy stops, sell stops. So wherever there's the most money that they can catch, they're going to go for it, regardless of economic data. Economic data is just used as a tool to manipulate for them to get price to go where they want it to go. All right. So, guys, thanks for tuning in for this recap. I hope you found this helpful. Make sure to let me know. Um, I enjoy doing these recaps with you guys. Just remember to always be logical. Think like the institutions. Where could there possibly be unfilled orders, areas of imbalance, liquidity? That will help you make your a better decision. Again, guys, we want to be able to have high probability and low risk trades. Okay, low risk trades when we are trading. And so I want you guys to keep in mind that when you are trading, even if you have to wait a day, 4 hours, an hour, just to kind of give you an edge when it comes to your probability, that's what you want to do. Okay. So remember, guys, high probability, low risk trades. Sometimes it pays to be patient. So if you have to wait an additional candle to form to see the momentum or to see the shift, then that's what needs to be done. I know it's a lot to ask of yourself to be patient, but set those alerts. That's why I have these alerts to let me know because I don't want to be looking at the chart all the time. Okay. So, guys, I hope that was helpful. We'll see you soon. This is Coach Cindy. Bye.